Uh, we can go through for different types of mutual fund. Already about I said about classification of this mutual fund. Now, based on these types of mutual fund, let us discuss with the first one is open-ended fund mutual fund and the closed-ended mutual fund and the interval mutual fund. So let us discuss with the investment policy of mutual fund based on this different concepts which have been explained, and how these mutual funds are very much effective from one mutual fund to another mutual fund, and how it is classified and what are the benefits and the limitations of this kind of mutual fund. Now coming to the classification of mutual fund, here mutual funds can be classified in multiple ways. Funds can be classified based on investment objective. We have different types of mutual fund schemes. I said already about the growth funds, income fund, liquid funds, and they categorize based on the investment objectives. By the structure of mutual fund, if you see, mutual fund schemes are structured differently. Some schemes are open for purchase and repurchase on perpetual basis. Once this scheme is launched, the scheme remains open for transactions. Hence, the name of this category of scheme is open-ended funds. Okay, it's very clear. A scheme remain open for transaction. Hence, the name of category of scheme is open-ended funds. On the other hand, some scheme have fixed maturity date. This means schemes structured to operate for a fixed period till the maturity date or exist thereafter also. Since the closure of scheme is pre-decided, such scheme is known as close-ended. See, in open-ended, it is open to the transaction. In close-ended, it might closure some pre-decided dates. Then apart from these two, there are a couple of variants which would be discussed later on. Now coming to open-ended funds. What are open-ended funds, or what do you mean by open-ended funds? Open-ended funds allow the investor to enter or exit at any time. So open-ended fund, investor can allow any time to enter, anytime. You can buy shares today, you can sell shares today itself. So allowing investor to enter and exit at any time. Investor can buy additional units in the scheme anytime after the scheme opens for ongoing transaction. A prospective investor can also buy units at any time. Existing investor can redeem their investment and you can sell it. So they can sell the units back to the scheme to get the money back. And this is what I said. In open-ended, they are very clear, very systematically how it is traded. They allow the investor to enter anytime, exit anytime. They make to buy, they make to sell immediately. They can sell the units back to the scheme to their get money back. Although some unit holders may exit from this scheme, wholly or partly, scheme continues operation with the remaining investor. So scheme does not have any kind of frame which is to be closed. That is called open-ended. Now coming to the close-ended funds. Here there is a fixed maturity. Like investor can buy units of close-ended scheme from the fund only during its NFO. So here investor cannot transact with the fund after the NFO is over. So here if you see here, maturity period, the scheme is owned up, units are cancelled, the money is returned to the investor. The fund makes arrangement to providing liquidity. Then such listing is compulsory for close-ended schemes to provide liquidity to the investor. So investor who want to buy unit will have to find a seller for those units in the stock exchange. Under close, if you want to close, you need to find some of the seller also to buy. So investor who want to sell units, he have to find the buyer for those units in the stock exchange. So It is a pre-NFO and the post-NFO sale and purchase of units happen to or from counterpart in the stock exchange. So this is called closed-ended funds. Then you have a third one which is called interval funds. So interval funds combine features of both open-ended and closed-ended schemes. They are largely closed-ended but become open-ended at pre-specified intervals. So for instance, interval scheme might become open-ended between Jan 1st to Jan 15 and July 1st to July 15 each year. The benefit for investor is that unlike a purely closed-ended scheme, they are not completely dependent on the stock exchange to be able to buy or sell units of the interval fund. However, to provide liquidity to the investor between this interval, the units must be compulsorily listed on stock exchange to allow investor an exit route. So I said there is a lot of difference between the open-ended and the closed-ended. And this interval fund, the period when an interval scheme becomes open-ended are called transaction periods. The period between the close of the transaction period, opening of the next transaction period is called interval period. So be very specific. They are the specified with the difference between open-ended feature and the closed-ended feature. Largely they are closed-ended feature, but they also said that the period when a interval scheme becomes open-ended are called transaction period, and period between the closed transaction period, the opening of the next transaction period is called interval period. That's a gap between opening and the closing. So minimum duration of transaction period is for 2 days. A maximum duration of interval period is 15 days. So no redemption, repurchase of units allowed except during specified transaction period. So this is the main three important structural or structure based types of mutual fund. When I said about open-ended, closed-ended, interval fund. In open-ended, investor to enter and exit at any time, and you can buy additional unit scheme. Open-ended, going the transaction, you can buy now, you can sell units back to the same scheme. And closed-ended, I said that there is a fixed maturity. Like if you buy now, there is a fixed date when you can sell it. So here investor can buy units of closed-ended scheme from the fund during the NFO. Investor cannot transact with the fund after the NFO is over. So at the end of maturity period, scheme is we're going to wind up and units are cancelled and money is returned to the investor. So this is what I said about when it's come for open-ended, you don't have a fixed maturity period, but closed-ended you have fixed and maturity period. And interval, it's an combination of both, especially they are close-ended. Okay, close-ended become open-ended for specified intervals, and I said minimum interval scheme might be having Jan 1 to 15 or July 1st to 15 of the year, so that is classified. So these are the three structural based on the mutual funds, structure based mutual funds, and here open-ended, closed-ended, interval, and three classification. And coming to the management to portfolios and management to the structure base, you have a asset class. Now mutual fund scheme categorized when it's come for SEBI regulations, and I have said about when it's come for asset class, there are equity funds, debt fund, money market fund, hybrid funds. Now we'll study about what is equity schemes or equity funds. Now equity schemes or equity fund. Before getting into equity fund, I want to give an overview about these mutual fund schemes under category of SEBI regulations. Now here, with a view to bring in standardization in classification of mutual fund, these schemes are clearly distinct from one another. SEBI issued a circular about categorization, rationalization of mutual fund schemes in 2017. And the objective of bringing uniformity in the characteristics of similar type of schemes by launch different mutual fund houses. So under that, the first is an equity fund. Now, equity schemes like there are different equity funds. Under that, equity schemes are multi-cap fund, like an open-ended equity scheme investing across large cap, mid cap, small cap stocks. The minimum investment in equity and equity related instrument shall be 65% of total assets. So we have a equity fund. Under equity schemes are there. Equity schemes is a multiple or multi-cap fund. And I said about multi-cap fund open-ended equity scheme. SEBI has a circular dated in September 11 for this. Minimum investment equity related instrument, large capital companies 25% of total asset, and minimum investment in equity by mid cap companies 25% of total asset, and minimum investment equity and a small cap also 25% of total assets, total 75%. So mid cap fund is one of the equity scheme. Then uh, here there are a large cap, mid cap, small cap company are defined as follows, like large capital or large company, capital companies like first to 100 company in terms of full market capitalization. Mid cap is 101 to 250 companies. Small cap is 251 or to 250 first company onwards in the full market capitalization. So you should know about this. So when it's come for multi-cap fund, you have a large cap, mid cap, small cap. Many people invest in the large cap, mid cap only. When we talk about large cap, company ratings from a company stand with the number of first to 100, first top 100. Mid cap starting from 101, that is 101st to 250th company in terms of full market capitalization. But when it's come for small capital, 251st company inwards of full market capitalization. So you should know that mid cap, large cap, and small cap. And large cap fund are open-ended equity scheme. Okay, and this large scheme predominantly investing in large capital stocks. Minimum investment in equity and equity related instrument by large capital company shall be 80% of total assets. Then you have a large and mid cap fund where open-ended equity scheme investing both large cap and mid cap stocks. Then you have mid cap fund open-ended equity with the mid cap stocks of 65%. Then you have small cap fund. Then you have one dividend yield fund where open-ended equity scheme predominantly investing in dividend yielding stocks should invest in dividend yielding stock minimum 65% of the total assets. Then value fund or contra fund, we call value fund or contra fund. A value fund is open-ended equity scheme where investment strategy, minimum investing equity, equity related instruments shall be 65%. Then you have a focused fund where open-ended equity scheme investing maximum 30 stocks, right? Mid cap, large cap, mid cap, small cap. So minimum 30 stocks. Then you have a equity linked saving schemes, we call ELSS, open-ended equity linked saving scheme with a statutory login period of 3 years and you get a tax benefit. Okay, all these are based on equity funds. So there are different types of equity funds. So as under asset classification, I have said about large, mid, small, dividend yield fund, value fund, contra fund, focus fund, sectoral. When it's come for sectoral, open-ended equity scheme where they are based on infrastructure, construction, cement, steel, telecom, power, right? Then equity linked savings schemes I said, and I said there is a statutory login period of 3 years and tax benefit. This all comes under equity fund. So next is about the debt schemes or debt funds. Now when it's come for debt fund, you have a open-ended debt scheme investing overnight security. That investment overnight security is having maturity of 1 day. When we talk about overnight is 1 day. And overnight fund, you have a liquidity fund again for like open-ended liquid scheme whose investment into debt or money markets with the maturity of 91 days only. Then you have a ultra short duration fund where an ended ultra short term debt scheme investing debt money market 3 to 6 months. Then you have a low duration fund for 6 to 12 months. Money market fund up to maturity of 1 year. Short duration fund you have a between 1 to 3 years. Then you have a medium duration fund 1 to 4 years. Medium long term 1 to 7 years. Long term fund you have a more than 7 years. Or you have dynamic bond where open-ended dynamic debt scheme investing across the duration. Then you have a corporate bond fund investing above rated corporate funds. So all these are classified, and based on this you might be seeing about there are various debt schemes based on different classification. You have a credit risk fund, also one of the debt fund where open-ended debt scheme investing below highest rated corporate bonds, like minimum investment corporate bond shall be 65% of the total estate. Like then you have a banking and PSU fund. So PSU, you have public sector undertakings, open-ended debt scheme like debt instruments of bank, public sector undertaking, and public financial institution or municipal bonds. Then you have a gilt fund where investing in the government security. Then you have a floater fund, open-ended debt scheme, predominantly investing in floating rate instruments, including fixed rate of instruments converting to floating rate. Then you have a swap derivative, right? All these are what debt-based funds. So you'll get a clear idea once you get an when you go for buying or purchasing a particular kind of a debt funds, and with the login period and the long term or the short term, how it is classified. So now this is what about the debt fund. Then coming to the next slide, you have here money market funds and hybrid funds. But I'll show you some of the slides here where mutual fund category there is no dearth to the number of schemes that each mutual fund comes out with, in order to bring a uniformity and facilitate easier and a comparison of investor. So SEBI has designed category for mutual fund schemes. Then there are different mutual funds, different types. You can see here in this mutual fund schemes, equity funds are there, debt funds are there, hybrid schemes are there, solution oriented schemes are there, other schemes. And you might be seeing how it is differentiated. So equity funds, you have equity linked savings scheme, what I said, large capital value counter fund, multiple cap fund. Debt funds, ultra short term duration fund, low duration fund, money market, gilt fund I've said. Hybrid schemes, dynamic asset allocation fund, arbitrage fund, balance hybrid fund, equity savings fund, solution oriented scheme, retirement fund, children's fund, other schemes, index fund, fund of funds. Or there are a lot of schemes which is available, but you will study only with the restricted based on the classification. So when it's come for based on the asset class, what I have shown you here, you might be seeing equity fund invest primarily in stocks. That's why the equity itself is in stock. And example, large capital, mid capital, mid cap, small capital. And I given the large cap how long, mid cap how long, and small capital how long, and with the duration, sector specific funds and thematic funds. And I said about what you mean by thematic funds also. So there are different classification, and thematic funds I said, or sectoral thematic funds I said, uh, open-ended equity scheme thematic, and such as a bank power is a sectoral fund, while an open-ended scheme investing in the line with investment theme. Example, infrastructure thematic fund might invest in shares of the company. So infrastructure, construction, cement, steel, telecom, power, and a minimum investment and equity related instrument is particularly 80% of total assets. That's what I said about thematic fund. Then you have a debt fund here. Debt, I already said that invest in a fixed income. instruments like bond, then government securities and corporate debt, right? Then example short-term, long-term liquid gilt fund again. We are not touched about a hybrid fund that will be explained in one more class. So hybrid money market and commodity funds. I'll stop here. We'll see in the next class. Thank you.